Hi, I'm Kenny Klaus, and this is State 48 Homeowner.
Hey Kenny, so you were talking just the other day about this concept called infinite banking.
I was? I don't know what I'm talking about, but no, I was introduced to the concept, and I'm going to tell you, we have a great guest today. I don't know that we'll be able to accomplish everything today. I'm sure we'll have future talks on this because it's a mindset shift to really understand what it is. But when you think about the biggest buildings on any corner, anywhere you go, are typically, banks.
Banks, yeah. You go, we went and looked at L.A., the downtown, and it's hard to find a high-rise there that isn't a bank.
I was in Colorado Springs one time. Me and Nikki were walking, and I counted 14 banks within like a mile and a half, like square mile, like of just like little ones to big ones, and you're like, okay, success leaves clues. There's a reason there's a lot of banks. But it's the information about it that has really not been mainstream before of how do you become your own bank, your family bank, if you will. And so our guest today is an expert in that, which is why we have him here, and we have a client of his also. And so today's just really to kind of open our eyes to the concept and see if it's something that you might want to explore a little further.
So welcome, Kyle Fuller from Factum Financial, and it's great to have you on. I've had the pleasure of listening to you talk on this before. You explained it so incredibly well. So I'm looking forward to that. We also have Ty Lusk from the Klaus team, who is a client and is doing the infinite banking. So it's going to be neat to have everybody's opinions and experiences on this. So Kyle, what is infinite banking?
Well, it's an honor to be here. Thanks for having me. Infinite banking is a process, first and foremost, right? It's a mindset on how you view banking and as it relates to you in your life. Now, this is a major paradigm shift for most folk. So let's start with Robert Kiyosaki's cash flow quadrant. What do we understand from that? You got the left side and the right side. And typically on the right side of the quadrant, you got your business owners and your investors. And they typically pay the lowest amount of tax and they have the highest rates of return. We know that it's very advantageous to get on the right side of the equation. Now, there's something behind that that's looming. I was talking to one of our agents on our team, David Zapata, and he was making this point. Behind that is this banking conversation. It's almost invisible because you don't really see it's there. We all participate in it. Mm-hmm. But if you think about it, the bankers are the ones financing everything that the business owners or investors do inside the money game. Isn't that a unique concept? Mm-hmm. We're never really taught to think on that high of a level. And so if we just look at the flow of money, you got consumers, business owners, and investors, and every one of us in this room are one of those three, right? We all make money. What we've been conditioned to do is save money with a bank because that's what we've been told to do. Now, the banker takes that money and immediately lends it out to other consumers, business owners, and investors, which are also us.
Right. Yes.
And we let them have that function. We just participate in the world that exists right now. And we pay the banker back with a high interest rate for something like a credit card, mortgage, vehicle loan, business loan, whatever it is. And then the banker turns around and pays the depositors back with a very low interest rate.
Now, if any,
right?
Yeah.
I mean, they're starting to creep up now, but the last 10 years, it's 0.05%. It's so low, you'd never see an increase in your savings environment. And if you just look at that, I think what we should be asking ourselves is, why am I not trying to own that function in my life? And this is where it's a major paradigm shift. And the only way I can describe this is, Ty, you're in it, you're early on in it, and you're starting to learn. But this is the equivalent of me being in a swimming pool right now, and I'm trying to tell you guys, all right, when you jump in the water, it's way different than you walking on land. And you got to move your arms kind of like this, and you're going to kind of sprawl out a little bit. You can watch it, but you don't fully understand till you get in the water and you feel it. And then you say, oh, this is what this is. That's how I can relate banking when you're talking about it versus start doing it. When you're doing it, you start to see, oh my gosh, look at all these possibilities that are now in my life and opportunities where before you'd never see them because we're so focused on being a business owner or an investor. And I don't think that's a coincidence. I think it's intentional because as soon as you understand this, there is a whole world of opportunity and cash flow waiting for you when your mind suddenly connects to the banking part of the journey of life.
Well, when you think about it, I mean, none of us were taught, and we all kind of say the same thing when we bring it up, is about money, debt, assets, liability. We just go get a job and it's make as much as I can and save as much as I can, which is a mindset that is not the worst thing out there, right? But it's, for a lot of people too, it's when did your last formal education stop? And that's where part of the problem is, because we don't get taught any of this stuff in school. I mean, Dave Ramsey's made a career of just teaching people a fundamental of spend less money than you make, right? and
concept.
But yet when he teaches it, sometimes you go, okay, now there's principles that I didn't learn. And the problem is, as we get older, we get caught in the mousetrap, if you were, the wheel of just got to work more, and I'm working. I don't have time to stop and read, learn, or grow. And I know I've been to a couple of your workshops that are extremely informational and almost slap you in the face, like, okay, I gotta do more of this. And so I think as people go through this journey and decide whether or not it's for them, I know you've got classes. We'll get schedules out for people that are interested. No sales pitch, I'll tell you. When we first met, that's how it's been. Like, you're like, I'm going to give this to you. I'm not going to bother you. In a month or so, call me if you want to talk about it more, because it's not a sales pitch. It's more of almost like, thank you for bringing this to me. You just got to take the time to kind of understand it. And if you try to understand it on your own, that's where I think the fail is. I think you got to get around people who are doing it and hear it more than once to really understand, because it is a different way to look at it. But when you look at Wells Fargo, B of A, I mean, the biggest banks in the world use this tool. And that's what was so eye-opening from a credibility standpoint, and just, okay, why don't they want us to know this stuff? Because if there's less deposits in their banks, that means less profit for them. That's why you always wonder why we're not getting educated on it. And I think you'll understand that through this process and in the book that's available and things that are out there.
Right. So there is a book, and there's lots of other spin-offs that have happened from that book. But the original source is Becoming Your Own Banker, written by Nelson Nash. That is the original source. There's lots of different versions that are spin-offs from that. So if you want to get it from the source, that's where you want to go. It's a quick read, 85 pages. I'm an average reader. It takes me like 2.5 hours to read. But for him to put this much info in an 85-page book tells you how brilliant he was, because that is really hard to do. Mm-hmm. And if you read the very first line in the book, he says most people are going to need 8 to 10 hours of exposure before this really connects. This is meant to be a 10-hour educational course, which is why I never try to sell anything to anyone on the first appointment. This has to be education. And as soon as you see it, you actually want it. And that is way different than, if I got to drag you into this business, you got to drag them around. You want to work with people that get educated and then say, oh my gosh, I got it. All right, let's team up. And that's really where we've excelled, is we run an educational company. I wouldn't even say we're in sales. It's just we got a lot of educational content, and we teach to enlighten so you know better, so you can do better. And it's all about empowerment. We are so far opposite of financial planners. We're not in that realm. I don't want to manage money. I want to show you how to control the banking function in your life, because I absolutely, with 100% confidence, believe Kenny has unique abilities, Ty has unique abilities, Scott does. And if you controlled more of the flow of money in your life, you're going to know what to do with those dollars, because you can use your unique abilities in the money game, which no one else can mimic. That makes you incredibly dangerous. And when you use that to start a business like you have, Kenny, that's the greatest return ever that you're going to see. And then you also get to bless other people's lives through it. And so most typical financial planners are saying, let me have your money, I'll manage it for you, I'll get you a higher rate of return than what you could get. And I just don't believe that that's working for a lot of people, at least not for me, right? I want the control because I see value and opportunity in the world that no one else does. And if more people would bet on that, you'd see their lives transform, right?
And it doesn't mean you can't have both. That's the cool thing, is you can still have certain stuff with financial planner and then look at this. But you said it earlier, and I think it's empowering to kind of hear again for people, is you're not in a sales business, you're in a training and education business. And interestingly enough, Keller Williams, when Gary Keller built it, was built as a training and education company. That's why there's not mass media marketing and that. It's about training and educating people so they can be good stewards of the craft and go out and share that education with the public. And then hopefully the public then chooses to do business with them based on giving first. And I think that's what you've done with the classes, like you said, the book, and then just really trying to introduce it to people. But your point is you set me up for success with it by pushing it so far. Like, it's going to take time, and it has. It's taken time to really go, okay, is this legit, first of all? Because there's a few things within it that immediately a lot of people's guard goes up on. And so I think it's trying to get through that. But through trusted source and leading with education, I think is the reason you've had the success you've had and have changed so many lives.
I remember when you and I met first was a few years ago, and we had lunch and you explained it, and it was sort of like, that seems pretty cool, but I still wasn't quite getting it. And then you invited me to, be part of I think 2 or 3 different workshops that you did, and it started to hit home. And at that time, I was also finalizing paying off all my consumer debt. At the time I had a car loan and a little bit in credit card and that kind of thing. And that was quickly getting out of debt. So then it became, well, that money I'm going to have to reinvest and diversify, right? So I had some stuff in stocks, I had some real estate, but then I was like, well, how can I use savings, which is essentially what this is? How can I invest some money into savings that I can access later, but not lose the earning power of what I put into my policy? And by the way, have death benefits. So just in case something happens, I've got any other mortgages and liabilities are covered from the death benefits. So literally the people in my trust are going to be taken care of without any hassle. And so I made the initial first year investment. A chunk of that went toward the premium in case of death. I've got enough money to cover, a lot of my my mortgages. And then secondly, it's a vehicle that in the first 2 to 3 years, I'm able to build up to a point where next time I need to get a car, I'm not going to get a loan. I'll take a loan for myself maybe, right? And then just pay myself back from that. Primarily, it's going to be used for real estate acquisition. It'll be used for down payment, for future real estate acquisitions as I go into the longer future. So I love it. I'm in my second year now. It's like, as a client and as a friend of yours, it took me a while to kind of wrap my head around. And then I've just decided to go all in. And that's, what I've done in the last couple of years.
And so let me just touch on a few points you just made, Ty. One, it's a journey. And it's an educational process, right? You'd probably coach the same thing with real estate. You don't get rich in 1 to 2 years with real estate. You want buy and hold strategy. It's an educational process. Kenny, you probably know more about real estate now than you ever have in your career, right? That's through education. The same thing happens with infinite banking. Now, Ty, what you were describing is what we call the problem. So what makes this process so unique that most other financial planners in that realm are not ever discussing is that you finance everything in life. Now, this is a banking conversation. It's not an investing conversation. So Nelson Nash identified this problem in his book, Becoming Your Own Banker, that you finance everything in life. What that means is you're either going to borrow money from someone else, typically that's a bank, and you're going to pay them what we call an interest payment. Now, if you were like me, I grew up learning to pay cash. And why did I pay cash? Because that's what my dad taught me, and that's what his dad taught him. There was really no rhyme or reason. We just inherited our money habits from the previous generation. Going back to what Kenny, you said about, we don't learn anything from the public school system. We just are a byproduct of our environment, and that happened to be my parents. So my dad taught me to pay cash. What I was never taught, though, is what the interest cost was to using cash. Because when I paid cash for my very first car, I gave up the ability to ever earn interest on that money ever again. That's called an interest cost. Now, most people have no idea how to calculate what that is, but that means the money that I used to pay for the car is gone forever. Had I had kept that in a more efficient banking environment, which we'll get to in a second, I could have earned interest on that money every day for the rest of my life. That is a huge sum of money. And as soon as I was educated on that topic from an orthodontist here in Chandler, it changed my whole financial view completely. Started looking at money completely different. And that's where the banking side comes into play. You see, banking is the exact opposite of what investing is. Banking is about controlling the dollars that come into your life, and you harness them so you keep earning the interest costs on them every day, now and in the future. When we go to invest, what you're doing is you're separating the control of you and your money. It leaves you with intent that it comes back with more money. Way different conversations, which is why people have a hard time grasping this right away, which is why we focus so much on education. You see, dollars are going to flow into your life, and we've been taught to save those dollars in some pretty inefficient savings environments. Checking accounts, savings accounts, maybe a CD. The problem is the entities telling us to do that, commercial banks, do not keep their savings with savings accounts, checking accounts, or CDs. So, I don't think I'm that smart, but I've got decent common sense. So when I started looking at the banks and I said, Okay, if I want to study money, let's go to the top of the food chain. These big banks, they got the biggest buildings, any downtown. If you look at their business model, it's so simple, but it's so brilliant. They're making so much money. Now, with all the money they make, they intentionally choose to keep their cash reserves or their savings in life insurance products. Isn't that interesting? Specifically what we'd call at the middle class level, whole life insurance. Now, the hardest part about what we teach is getting past that misconception, because if I say that word, whole life insurance, in a seminar, at least 50% of the room goes, oh my gosh,
There it is.
not
That's
this.
the hook.
You know, and it's like, hey, I get it. I was there, but you got to dig a little bit deeper. You know, we've been taught at the middle class level that whole life insurance is the worst investment ever. Low rate of return, expensive to own, basically the worst investment ever created. Now, that's what middle America can tell you about it. Now, if you say, well, what are the benefits of whole life? They won't have an answer because they don't know anything. All they know is what they've been told. So if you go to the top of the food chain and you look at banks, you're like, why are they so anxious to keep so much of their cash away from other banks? They keep it with life insurance companies because they get a slew of benefits by doing that. It's more private, and I mean really private. No one knows how much cash value I have in my policies except for me. My CPA doesn't know because life insurance is not an investment. It's life insurance. But if it's structured properly, what you would look at it and call it as a consumer is like the world's greatest banking tool. Okay, that's the way the banks use it and see it. Now, right now, Bank of America's got about $25 billion in cash value. Wells Fargo's got about $20 billion in cash value. Chase Bank's got a little over 12. Now, notice I'm not saying death benefit. I'm saying cash value. See, they're buying it because it's such an efficient place for them to store cash. It also comes with death benefit, like you were describing, Ty, but they want it for the cash reserves and the qualities that it gives them there. It gives them some really unique advantages in the money game because those cash accounts are way more efficient than your checking account. It gives you like 6 or 7 benefits than 1 or 2 that you get with a checking account, which is it's liquid and it's safe in case you need it, right? And so once you make that paradigm shift and start changing where you save your money, your entire business model will change, your entire life will change, because now you are owning that problem that Nelson Nash identified in his book. Every dollar you make, you're either going to pay up interest if you borrowed it, or you're going to give up interest if you use your own money. When you run it through an insurance policy first, you capture that interest cost and you earn interest on it every single day for the rest of your life. And it's why I insure my kids as early as possible. Because when people figure this out, common thing they say is once the light bulbs go off, they go, where were you 20 years ago, right? And for me, I think I was a 9th grader at Keno Junior High. So you probably didn't want to talk to me at that time. But that's a common thing that we hear, right? And so how do you solve for that problem? As soon as you understand this, I max out my kids with the biggest policy I can get on them as early in life as possible. So my youngest son, Remington, is 2 months. He's been maxed out for about a month. So a month old is about as early as you can get these policies. I want to give him the strongest chance to have that money be compounding for him every day in the future. And the insurance, you buy a lot of insurance with a little bit of money if you do it earlier in life. The longer you wait, the cost of insurance goes up. It's just the way insurance works, right? Closer to death, the premiums go less far with your death benefit. So there's an efficiency play there as well.
Yeah, that's a lot in a short period of time here. But, I hope if this piques the interest of anyone listening that, reach out, let us know. We can get you more information or get you to one of the workshops where you sit in the audience and come in and leave and do what you need to do and not feel anything other than just introduced to the concept. And I think that's part of the problem for a lot of people is they just follow the herd versus trying to figure out, are there other options that are out there? And I think that's one positive with the internet is it's really broken down a lot of those barriers as far as reach to get to people to say there's different ways of doing things. And a lot of these companies that are doing them don't want you to know because they kind of have a monopoly on them. It's when we got into self-directed IRAs, it was like, well, why doesn't the financial planner ever talk about self-directed IRAs? Well, because it takes money out of the money they're managing for you. And it was like, wow. And now, half of us on this team have self-directed IRAs. So I think the education piece, it was what was so inspiring to me as you lead with that, because there are a lot of pieces to this puzzle to really understand. It's really, once you get to that, I want to know more, then it's that consultation one-on-one to understand your scenario, where you're at, to give you more specifics. But I definitely think we wouldn't be bringing this to our audience today if we didn't think that there was, value there for people to understand. And, our goal is, if we can bring enough education to our community, we can help potentially change lives, not just their lives, but legacy for their family, of different ways to look at things. Not that we're perfect, but we're working to get better every day, and just, really investigate things and see, is there a better way, not just work more overtime, work 2 jobs, do this, but better ways to work with what we have currently, which then motivates you a lot of times to want to do more, or you can do more in the same amount of time. Hey everyone, this is Kenny Klaus with Klaus Team Real Estate Solutions. We know there's a lot of confusion in today's market, whether it's billboards, TV, radio, mail, everyone's trying to get your attention. They offer one lane, where at the Klaus Team, we have over 20 different programs we can help you navigate through to find out what's best for you. And remember, we work for you, they work for themselves. We're here to represent you and make sure you have the best experience possible.
Visit us at klausteam.com/call-us-first.
I'm sure there's going to be a lot of questions come from this one.
Well, I think, a big one for people that aren't familiar with life insurance policies like this, how do they access the cash value?
So an insurance contract is nothing more than that, a contract. You're actually first in line, and you're the owner of that contract, and it's unilateral. So you have complete control of everything to do with that policy, including the available cash value that it builds. So when it's there, you can access it just like you would any other account you have. They're very liquid. I'll give you a good example. I keep a lot of cash inside my insurance policies, way more than I keep at a bank, because it's more beneficial for me to keep it in my banking system. And I know I needed some dollars for marketing this year. So I accessed about $100,000 through my policies, had the money in 3 days. One page that you fill out, and I borrow against my cash value, not from it, right? This is a big distinction you need to understand. When you borrow against it, I'm actually using the insurance company's money, or OPM. What do banks do? All they use is OPM. We should just model what they're doing. So this allows me to use money for marketing while all that cash value is continually compounding and earning interest for me. That account never goes down. Now, what most people would do is they'd have cash in a checking account that they save up and they build up until it gets to a certain point, and then they withdraw from that account and they interrupt the compounding, right? They constantly do this. The 2 problems there is you're constantly interrupting the growth of your money, and because of the savings environment it's in, you never earn any interest in there. So it really is very inefficient to leave your money in a checking account, which is why I'll leave maybe 3 months of expenses in there. Everything else I'm putting over into premium, into my policies. Now, the bigger that gets, the more I can do with it. And like Ty, you said, increases my available cash, but it also increases my death benefit. So I'm building legacy and my cash accounts at the exact same time.
So let's say, for example, that you've got in my policy, I've got 30 grand, let's just say, and that's call it 4 or 5%, whatever is a decent amount of return. I then am able to take a loan against that money, not pull it out, and then loan that to my teenage son, let's just say, who needs to get a car at 6%. Or, right now, car loans are in that 6 to 8% range at least. So I could be market value with that money and be making a spread while continuing to earn interest on the money that's still in the account, still in the bank, but I'm able to access a loan against that at a higher rate, and then that increases the cash value as I repay that back. Is that right?
So you just described banking, right? So what does a bank do? They take in deposits and they lend it out always at a higher interest rate than what they're going to pay. And as long as you do that, the excess, so you will pay some interest to the insurance company. And right now the loan interest rate is like 5.28%. Now, if you're charging your son 6 or 8, that means you're going to have a portion of that that'll go back to your policy in the form of premium, which is going to help it grow, right? So this policy loan feature, it's not magical. You still have to apply the rules of banking to it, right? Like a bank would never loan out money unless they were going to get back more than what they loaned out. We'll coach you on how to do the exact same thing. But what's cool is you just controlled more of the cash flow from your family, Ty. Like this is a conversation that not enough families are having. All of our kids are going to need vehicles. Now, you're either going to get ahead of that curve and go build a family banking system and use it as an opportunity to connect with your children and teach them about money because no one else is going to do it. And once they know you have a family banking system, they will come to you and say, all right, Dad, I need this. I need a car. And you're either going to let them finance it with a bank and you're going to let the banks get all the cash flow from that, or you're going to get it. And the reason why they should use you, even if you charge them a higher interest rate, is there's also this death benefit, right? And you said yours is your beneficiary is your trust. Well, who's going to get the money from that trust?
Yeah, the beneficiaries of the trust.
Those kids. Imagine walking into a bank and saying, yeah, I'll buy a truck from you. I'll get the financing from you at 7%. And the bank says, we got this really great deal right now that if you use us for the next, 60 years, every dollar you paid us, we'll reimburse you tax-free in 70 years. Sign me up. Yeah. Where's that bank? It does exist. It's the Fuller Family Bank right now, right? We've created that. The kids will need financing in their life. So we're either going to let that function go to a commercial bank, and they're going to take all the money, and they're going to give you nothing for it. They're going to give you a sucker, right? They give you a dumb sucker when you walk in.
They used to.
They don't even do that anymore.
Walk in anymore.
Yeah. Right. It's true. It's ATMs, and so online. But if you own that function, that is a lot of potential cash flow that we're not seeing, right? We're only thinking of business and investing. We're not thinking about controlling the banking function in our life. And I'll give you some statistics. So the average person will drive 13 vehicles in their lifetime, okay? And roughly spend about $400,000 on those vehicles. This is just the average. Now, whether you pay cash or finance those vehicles, you will end up with no dollars at the end of your life because you're constantly giving it up to someone else. You're either paying up interest or you're giving up interest you could have earned. When you run the same $400,000 through a more efficient savings environment, which is a whole life insurance policy, and then you go purchase the cars and you're the banker now, so you're paying the interest to your banking system. If you just behave the same way using a different savings environment, you'd have about $1.5 million at the end of your lifetime. So that is a statistic and a plan I could build for anyone in my sleep. That is like child's play, right? It's the easy stuff. What gets fun is when I got 3 boys. So if I know that $1.5 million scenario I just gave you applies to all my kids, well, are my kids going to get married? Most likely. Now times that number by 2. So 1.5 million, right? That's 4.5 for 3 kids. Times it by 2, that's $9 million in just vehicle interest cost we are giving up as a family by not owning that function. That's a lot more money than people will ever generate in an investing portfolio in their lifetime. And it's sitting right in front of you. We've just never been taught to think about it that way. Now, what I love is the earlier you can teach your kids about this and program them, the better off they're going to be. So we've solved for this need pretty early because I sought out mentors that were 60 and 70 years old. So I went and got the wisdom and experience from the guys that have been doing this for a long time. And so it helped me accelerate my journey. But we've solved for this need for our family. So now when our kids need money, they actually come into the family and it helps us grow a stronger relationship. So one of my favorite authors is Stephen Covey. He talks about the concept of working interdependently, right? See, most families, when you got young kids, Kenny, you know this, they're very dependent on mom and dad early on, right? For everything. And then they turn 18, they go to college, they get married, and then we separate and they become independent. They go start, the small Lusk family, the small Klaus family. And this is a proud moment. And they go get their own financing, they get their own mortgages, and this is like a good thing. The problem is some of the wealthiest families in the world, like the Rothschilds and the Rockefellers, they don't operate this way, right? They are big banking families. So if you change that paradigm, what should happen is we should have been building a family banking system so that when they're ready, they tie into the family. And now the conversation is, let me show you how money really works. Now, we've done this with our family. We meet once a quarter, and we go over these family banking principles. Now, I'm the second oldest of 11 kids. So you take that $1.5 million and you apply it to like an LDS family or a big Catholic family, we're talking like $1 billion. Now, it's not that high, but it's a big number, right? So I can tell you our family will never purchase a vehicle with a commercial bank ever again. Everything's financed within the family. And what it's done for us, now these are not handshake deals, okay? One thing I've loved about Dave Ramsey is that he says, if you're going to loan money out, you just gift it or you don't do it at all. And the reason he's saying that is because most people are doing it without education and without a contract in place. So when my younger siblings come to me to finance vehicles, I have them read Becoming Your Own Banker. I show them an amortization schedule. They sign a contract, and I tell them, if you're late, there's late fees. If you miss payments, I will come to get this car. Do you understand? They know the relationship that we're starting. I've never been burned once on a family loan. It's actually brought us closer together because we trust each other now. Isn't that cool? Completely unseen value that this process has brought to our family. Most families are very taboo when it comes to money. They don't want to talk about it. Our family is very open. It's actually strengthened our relationships, which has been one of the coolest benefits that we've seen from this process.
And we're talking a lot about, vehicles, for example, but isn't it true that a lot of your clients are using their policies to finance investment real estate? Long-term buy and hold rentals, short-term rentals, that kind of stuff as well. Because is there a limit on what you can use the money for that you borrow from your policy?
So the concept, becoming your own banker, or the infinite banking concept, Nelson Nash was very intentional about calling it this because the possibilities are infinite. You have a different mind than I do, Ty. So, same with Scott, same with Kenny. You can use this policy for whatever you want. It gives you absolute control because there's no stipulations on what you can or cannot use the money for. So I'm a big fan of the self-directed IRAs and Roth IRAs because it puts the control back in the consumer's hands. I love that. But there are still some stipulations on what you can't, like you could not take that money and go to Las Vegas. You could do it with a policy loan. We probably wouldn't encourage that, but that's like ultimate freedom, And so you're right, Ty. If it's very efficient just controlling the flow of money for vehicles, now imagine coupling that enhanced savings environment with an investing strategy or for your business. That's where I really like to use it because that's where my highest returns are. So if you're using it now, take a policy loan to go purchase a cash flowing asset like real estate, which we're a big fan of, right? Lowers your taxes, appreciates over the long haul on average, and produces cash flow, which is the number one rule of winning the money game. Now you've got a renter paying down a mortgage for you, and you take the cash flow to refill your policy. If you don't have someone doing that, you're going to do that on your own. It's still very efficient, but it's even more efficient when you're using it to make investments that are producing cash flow. So you're exactly right.
Yeah, we see it. People, Ramsey was teaching, pay off your house, these kind of things. And we look at it as like just dead money. It's just, to your point earlier, it's just it's not doing anything for you. So we try to educate on, well, what if? And just open up the conversation. Again, same with us. It's not about forcing anything down anyone. It's just introducing them to a concept. Do they want to learn more and hear more about it? And I think that's, what today is. It blows your mind when you first hear this stuff. And I'm sure anyone who's listened up to this point is like, whoa, I had to pull over, or like, never mind. It's too complex. The benefit with you guys, I think, is you just break it down into bite-sized nuggets, and like the training stuff you have is just, I forget how many, 30 some core. It's a lot, but it's broken down into stuff where you can go, okay, I'm not ready to go to the next until I understand this, but it's all education based so that you feel confident in what you're doing, because I think we both know that if people are educated right, they're going to become the raving fan of like, why not look at this as a better option? And I think becoming the bank is a great way to look at it. And one thing you said earlier, you said it a couple of times, but I had to get out of my own way with my thinking with it, is this isn't looked at as an investment like you would put with a financial planner. This is you becoming the bank. And I think when you say paradigm shift, I think that is the crossroad. That's the fork in the road. If you keep going down this way, is it investing versus am I going to become a bank? And I think the difference too is there's a little delayed gratification to this, right? It takes a little time to fund, and so a lot of people want now. But if you're going to be alive in 2 years, 3 years, 4 years, 5 years, this is going to catch up and then blow away most every other opportunity out there that I've seen, at least. And because of the secondary part to that, which just becomes the bonus to me, is this life insurance policy. The banking is a home run in a loan, let alone the fact that you end up with a death benefit. Most other investment vehicles, there isn't that at the end, and yet what if we run out of money? What if we want to leave something for the kids? And how many real estate transactions have we dealt with families where it's either a surprise or there was nothing there to even pay for a funeral? And it happens all the time. I hate to say it, but people live in the now, and consumerism is just caught people. Now, I mean, we could be sitting here and order something and have it here by the time we finish this conversation. They've made it so easy today, whereas getting back to fundamentals and understanding how money works. And I think that's the key. A lot of us just really didn't understand how money really works. And it's not anyone's fault necessarily, it just wasn't taught, and we follow our trusted people, which would be grandparents, parents, and in that lineage, and go, okay, well, I'm doing good, I'm saving this much money.
And we've built a culture of that understanding, the basic understanding, and to have a checking account, have a savings account, and not really talk about money much more than that.
Right. Yeah.
Kind of help simplify it too for me, because I'm like, what do the wealthy people do? I just want to do what they do, right? And this is one of the ways they do it. I think I've been taught diversification. Well, this is in addition to stocks and real estate and other investments that I've got. But I think what you were able to help me do was to simplify it in my mind, to cut out all the chatter and the programming that I'd had from childhood with people who weren't wealthy, by the way, about how, look, it's a savings account. And it's going to have a death benefit, and I can borrow against it as needed to invest and get a higher return. So when I simplified that concept to just those small ideas, it was easy. Now, the other thing is that there's a limit. Is that right? Each policy, there's a limit on how much I can put in that per year based on earnings. Is that right?
Yeah, so here's a fun statistic. I'm going to say this one slowly, right? So
some of us appreciate that.
Hey, I only have 8 credits at MCC, right? So I have to slow it down. I'm not that smart. So the IRS has limits on how much of your after-tax dollars can go into one of these assets, okay? The IRS has limits on how much of your after-tax dollars, Kenny's laughing, can go into this asset. See, we should step back and think about this. How much real estate can you buy with your after-tax dollars?
Much as you want.
What about stocks?
Yeah.
Limit. Why would the IRS limit how much insurance you could have with after-tax? Isn't that interesting?
It's not good for them.
Soon as the dollars go in there, they will never see it again. And when it's passed to my kids tax-free, they will still never see it. And if they're coached on this, right, this is what the Rockefellers and the Rothschilds have been doing for 6 or 7 generations, and it's why they're all billionaires. Now, every policy is structured to adhere to those IRS guidelines. So Kenny's right. Everyone's situation is so different. We got to get some financial info, your goals. I could never recommend a strategy to anyone if I didn't know what you wanted to do. That's when you know you're being sold, right? Hey, you got to do IBC. I have no idea what you want to do, Kenny, but you need to do this. I need to know what you want to accomplish. And so for some people, it's legacy. For some people, it's investing. So depending on what that is, we structure the policy to fit their goals. Some people need a lot of cash in their policy right away. Others don't need that much liquidity. So we build it according to that, but you're right. There are limits on how much money you can put into this. They're pretty high, so it's pretty rare for us to have like a new client that completely maxes out how much money they could put into a policy. I mean, you got to be doing like some serious premiums, like $500,000 a year type of deal before you're considered maxed out with what they call your human life value.
The Klaus team is different. With the Klaus team, you have someone on your side. Where you live and make memories is important. We have more unique strategies than anyone else to help you accomplish what matters most to you. We can help you with traditional real estate as well as other options such as our lease purchase programs. We can help you buy first then sell, and we can bring you instant offers. We're here to help our neighbors achieve the American dream and help them build wealth through home ownership. For more info or to start your home search, visit us online at klausteam.com.
I think the benefit to this too, because we talk about wealth building and that, and some people are like, I'm not wealthy. I don't know how I could ever be wealthy. They don't maybe think big enough or think it's possible. The other side of this is the security it brings to your family, and I think we haven't really touched on that, but security, knowing that there is something there. if something was to happen. And in our world, like I said, in real estate, we deal with it all the time. Unexpected tragedy in life happens. It's kind of that peace of mind that if something did happen, I'm not going to bury the kids with a bunch of debt of funeral expenses and maybe I'm, whatever else, vehicle loans, whatever else is out there, that a lot of that carries forward. And so the security piece, I think, is something else that's important for people to understand as they get, if they embark on this journey of understanding this, it's another piece that gives you kind of peace of mind that I'm doing the right things with this and building, legacy and building security for the ones I care about the most.
Yeah. And, you referenced like the GoFundMes. You guys have seen that in your communities.
All the time.
Every time, right? Every time I see it, I'm just like, this is why we're trying to get our education out there. And so there's a couple different types of insurance. There's permanent insurance, which would be considered whole life. And then there's term insurance. Now, a lot of people get those mixed up and they're like, well, term is cheap and whole life is expensive. But the reality is insurance is priced perfectly for what it is, right? So term insurance is very cost effective because there's a 99% chance it doesn't pay out in the term, right? So what's the likelihood of someone dying prior to age 65? It's like 1%. What about after age 65? It's 100%, right? So this is why you might want a little bit of both, right? And so if you've got someone that's early on in their journey, young couple, whatever it is, maybe they can't afford a $5,000 or $10,000 a year premium to start building their banking system utilizing whole life as the tool. So we'd probably get them a very cost-effective term policy of $1 million for maybe $25 a month or something. I mean, it's very cost-effective. And it's one of the problems that we see too, is that people are running around with no insurance. Statistically, they're not likely to die. It's very rare. But when you see it and you're like, no, not the family that had 5 kids under 10, and you're like, what are they going to do? It's making me tear up a little bit right now because we've seen it. And it's like, that doesn't need to happen. It doesn't have to be that way, but it is because of the way our culture thinks, So
I think too, I read a lot and I got introduced to this a couple years back, and then I'm reading like the Rockefeller story, and all of a sudden they're talking about it, and the 2 families back then, I can't remember the other family,
Vanderbilts.
The Vanderbilts, and where they are today. I mean, this is real time, and the discrepancy between wealth between the 2 families that started off, as they built very similar, but the way they looked and handled money, and what happens too is generationally, they don't always have the same work ethic as the original family that actually climbed the ladder rung by rung and built it. Then I was listening to Tony Robbins. It was Total Money Makeover, one of his. They talk about it in there too. I'm listening to Lifestyle Investor. He talks about it in there too. And you start going, well, these are all niche people that have proven long-term success and teach about alternative, banking, lending, wealth building avenues. And of those, every one of them has talked about it, and it makes you go, okay, this is legit. It's not just Kyle selling this concept. This has been going on. It's just been for the uber wealthy. No different than a lot of the tax strategies are out there. Quite honestly, as I've read more and learned more, we all hate taxes to a degree, right? But start to understand them, you go, they're actually a tool built for the wealthy to make sure that money's being reinvested and that we're moving things, not just sitting on it. So, I just encourage people at a minimum, come out, go to an event, contact us. We'll be there to just help you learn this. It's, our benefit to it is just educating people and adding value to the relationships of those we serve. Most people buy a house and maybe don't do another one for 5, 7, 10 years. But we know that statistically, everybody knows 278 people. If we can add value to a relationship versus an online transaction or things that are available out there, but truly add value and change lives, that's how we earn the opportunity to talk to more people. And our mission is to continue to look for opportunities to give our clients that that A+ service, those opportunities, and to look back and go, wow, being in business with those guys or doing business with those guys has added so much value, to my life. And that's really what we strive to do. That's why we do this stuff, is educating about some financial stuff. We try to educate about the house, about just everything that goes on that's real life stuff that's happening. So it means a lot to take your time to come out and just kind of share, because I think that's been your journey since I've known you, is just really just sharing information. You decide if it's right for you and your family, but get educated first. Don't stop at the first, I heard about this. Because a lot of times when you ask people, the same person who told you like something, you're like, well, who'd you hear it from? Well, I don't know. I heard it somewhere. Like no one, you can really, if you try to track it down, you never find the root cause. There's just this conception out there. And what I've learned is stay in curiosity, out of judgment, and get your own information first.
Yeah, we got to be careful who we're taking advice from. Are they where we want to be, or are they not where we want to be? Right. And that's something to look at when we, think about how we're conditioned as a child. We were talking about earlier today in book club about how a lot of things we believe are just the opinions of other people in our lives when we were little. And we just took that to be the truth, and it might not be the truth. It's probably important that we reanalyze some of those beliefs that we were told from other people and see if that still applies to us.
Well, think about it. I mean, even 23, 24 years I started real estate, you had to go to a real estate conference and spend time and invest money to get the content. Anybody can jump on today and do a Facebook Live or do a video or a YouTube video and say whatever they want. There's no filter.
And they'll give anybody a podcast. I mean,
anybody. Look at us. Here we go. But it's scary because sometimes they can look bigger than they are. I mean, I can tell you with Keller Williams, being on stage with Gary, what was in front of the curtain and behind the curtain didn't always line up. And then he went to, you have to submit your P&L before you can get on stage, because, we're talking to 12,000, 15,000 people who are up there with Gary, so this credibility. And he went, well, wait a minute, I need to make sure that what you're saying is actually what's going on.
There's a lot of people that weren't.
And it's funny because you see a smaller group and a lot of the same people now, but it weeded out some things that were not as glamorous as they looked, and that, I think that's the problem with even, raising kids today and now grandkids today. It's like, where are they getting their information, and is it fact checked? Is it actually legitimate? And I think when you find someone who's willing to put in the time and without doing business today, but willing to continue to educate and grow, and that's what I've watched with you and your group grow, is it's gaining momentum because it's legit, not because somebody's selling something in one and done. And I think that's the relationship business that we've built over the years was, look, call us no matter what you got going on. We've got trusted sources that we've vetted. We've been through a process. And so, but I just think that the information out there is so, everybody's like, how do I get rich today? What's the thing I can sign up for? I mean, look at infomercials used to be that, to where now the internet is a lot of that. Everything looks so good. They got a fancy car in the background, a jet or whatever. By the way, we could put that on the graphic. Matter of fact, maybe we'll put it on your graphic when we put it up there. No, I'm just teasing. But the point is that anybody can do that stuff, and it makes it look, I want that lifestyle. Anything I've seen in my life, it's a process to build something, because when you fail, you only go back a little bit. When you just get put at the top, it's easy to fall all the way. We see it with lottery winners, athletes. Mm-hmm. I mean, they come into money, and it's like they haven't figured out the process of money, and they give it back so quickly.
Right.
And so there's just so much opportunity out there for people to slow down. I know we're all working. I know everyone's busy. You got kids, you got practices, you got all this stuff. But if you don't pay yourself first and give yourself, step out of life for a minute, get a little education, whether it's in this or health and anything else, you'll be amazed how much faster life will go. Because doing the same thing and expecting a different result, we know the definition of that, right? Insanity. And so I think opening our eyes to this is a valuable tool, and we're proud and excited to be able to, hopefully introduce it to, even if one person gets it, man, it's rewarding to us if it does what they want it to do, and it helps change a life.
So Kyle, I'd like to have you come back and let's dive into it a little bit further as to how it incorporates with real estate investing. But if people have questions now, how do they get a hold of you?
So they can go to our website, Factum, that's Factum Financial.com, and we teach classes all the time. 2 introduction workshops a week on Zoom, and then 1 deep dive. So we take a topic and we're heavy on education, right? So tonight I'm actually teaching with Josh Click, real estate agent with KW, and we're teaching infinite banking and real estate investing as our March seminar. So funny enough that we're in here recording this, and we'll be chatting about that tonight. So we've got content on Facebook, online, that's always free. We don't charge for any of our content. We want it to be out there. I'd love to come back. Let's have a follow-up conversation about some implementation specifically around real estate, which I think is the primary investing vehicle most Americans should be looking at as an alternative to like their 401k.
Yeah, we always say it almost feels illegal to have someone else pay off your mortgage, but that's what investing through real estate can do. And most people's wealth, their biggest wealth tool that they have is their primary residence. What if you had 2, 3, 4 of those? And I had to change the way I looked at it, because growing up that we just had one, and all of a sudden it's like, well, so there's just ways to get there without having to just necessarily earn it with all your wages and give up everything. There's tools out there that allow this to become more achievable. So,
and like you said at the start, success leaves clues, right? If you want to look at efficient savings environments, watch what the banks are doing. And then step 2 is now an investing conversation. And if you watch what most wealthy companies, business, they all have real estate. Like, that's one of the perks of having real estate. When I say whole life, people are like, whoa, wait a second. I know I'm not supposed to like this. If you say real estate investing, everyone's like, yeah, I'll go to that. What are we doing? So we love real estate. I think it's one of the most powerful wealth building vehicles. You want to talk about acceleration with a high level of control, certainty, and produces cash flow. Those are all win-wins. And so, yes, conversation 2 for us is heavily involved around real estate investing. And a lot of that's come because of guys like Steve Chater, you, Kenny, you, Ty, and the seminars and classes you guys teach with wealth building around real estate investing. So, yeah, there's a very powerful synonymous relationship there between whole life insurance and an investment strategy centered around real estate.
Got it. Yep. Awesome. Appreciate it, man.
Thanks for spending time with us this week at State 48 Homeowner, the ins and outs of owning an Arizona home. You can connect with us for more information, submit topics you'd like us to further discuss. You can see relevant videos, give us feedback, answer your real estate questions, and more at state48homeowner.com.